Hi guys, this is Investing with Envy and welcome back to another video. If you have followed the stock market lately, you will have noticed that there has been a downtrend, especially into the high-flying technology companies. As a result, there have been many investors that have seen their accounts go down, and I am no exception to this. Today we're going to explore why this is happening and if this will continue to happen in the future and what we can do about it. Again, please like and subscribe and click that notification bell so you get alerts whenever I do upload another video, and let's get into this. The technology sector has seen a huge upside in the past couple of months, and as a result, a lot of investors have seen their accounts grow. But as the saying goes, what goes up must eventually come down, and the same remains true for the stock market. This is due to people selling their stocks and locking in some of their profits because people know that stocks will eventually go down, especially from the rise that it has seen lately. Another reason why stocks have gone down is due to fear of inflation and how that can negatively impact your returns in the market. This is a real fear because there has been so much money being pumped into the economy that inflation is inevitable. But how does that negatively impact the economy? If there is inflation in the markets and you are expecting a certain return with your money, with higher inflation, your real returns will be diminished. Let's say that you are expecting to make 12% return on your money and the inflation rate went from 2%, and let's say it went to 4 and 5%. Now, instead of your real return being 10%, your real return with the 4 to 5% inflation will be 7 to 8%. And as a result, the valuations of these companies will go down because you are expecting less of a return from investing in them. Another reason why people are afraid of inflation is because the way to combat inflation is to raise interest rates. Higher interest rates will affect a lot of these over-leveraged companies that have borrowed a lot of money in order to grow, because their debt payments will increase with the rise of interest rates, and that will eat up into the future profits of these companies, and therefore their valuation is lowered. Although these fears are real, you need to stick to the fundamentals and buy great companies that will lead us into the new future of the world. Kevin O'Leary from Shark Tank recently did an interview with CNBC, and he talked about his thoughts about the markets right now and whether we can see an upside from here or if stocks will continue to go down. Let's take a listen.
Kevin O'Leary, big question. Are we nearing the end of the sell-off? Can you trust what we're witnessing today with this bounce?
Yes, you can. I think we're in a classic garden variety correction, healthy. You know, people forget volatility, it's back. And as a result, we're going to have days like we've had in the last week or two. Obviously, tech sector really took it on the chin. But the thing that really matters is earnings and growth. And so, you know, I look at the earnings numbers and they're just blowing them out of the water. We're having a spectacular comeback here. The economy's on fire. I think we're getting growth in the back end of this year like we haven't seen since the 50s. And so, you know, I have to look at this as a buying opportunity, particularly in tech, where I look at the quarter over quarter growth in some of these names like Zoom that got slaughtered and say to myself, wait a second, nothing's changed. They're still growing like crazy. And all of those companies that, you know, people said, oh, the PE is too high. Their growth hasn't slowed. The earnings are terrific. I think this is just a buying opportunity, and I think we're going to keep moving forward. What kills a market is real inflation, which we haven't seen yet, and slowing of earnings, which we definitely are not seeing. So I'm still full steam ahead. Equities rule, fixed income, nowhere to go. I think we're going to have a spectacular back end of this year.
So you gave me a lot to work with there, and I want to be clear here. You bought Zoom and DocuSign and Tencent and some of these other stocks that have gotten obliterated lately. Nobody is questioning the lack of growth. It's the question, Kevin, of too much growth. And the fact that inflation is picking up, that's undeniable. Look at all of the figures and the facts and what's happening in some commodities markets. Inflation is undoubtedly picking up. Isn't that a problem?
Well, this kind of reminds me, particularly on those names like a Zoom, The comments I used to get in the days of Amazon, when it would correct 38%, it did it every 18 months, and people say, oh, it's over, there's no more growth, yada, 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 yada. When there's a secular trend occurring, like what's going on as we speak to each other right now on Zoom, and all these technologies that empower digitization, direct to consumer, which is growing margins and growing a brand new digital America 2.0, that hasn't changed. We're in the third inning of that. So if you've got to be able to stomach a little volatility. We haven't had much lately. This is classic volatility. But I really go back to just looking at the quarter over quarter growth. Pick any growth stock. You know, I've given you three that I've doubled down on recently. But basically, nothing's changed. And so at the end of the day, if the market wants to value it differently by 40% and goes on sale, okay, I'll buy a little bit more. But tell me when the world stops growing. That's not the case right now.
Okay. Kevin O'Leary talked about the things that really matter right now is earnings and growth. And a lot of tech companies have seen tremendous growth even though we're facing such difficult economic times. He also mentions that what kills the economy is real inflation and the slowing of earnings. With so much money being pumped into the economy, people really do have a fear of inflation, and that is why you see a lot of people that are selling their stocks right now. On the other side, we have had a lot of tech companies coming out with their earnings, and we have seen tremendous growth. We are headed to a digitalized economy, and a lot of these companies are going to be a huge part of our lives and a huge part of how we do business, and they will be able to contribute to the overall growth of the economy because we will be able to do things cheaper, faster, and more effective. And that is why this pullback is strictly an opportunity to buy more into the stocks that you truly love, that you think are going to have major upside in the future, because right now they're selling at a discount. Kevin also goes in to explain how a company like Zoom has experienced a major pullback recently, but they've also had tremendous growth in their earnings. I'm a fan of Zoom, and I'm personally invested in it because I see it as a tremendous tool for companies to cut costs on employee travel when employees can just get on a Zoom call and have the meeting this way without the additional cost of travel. An important thing to note is that about 20 seconds into the interview, it shows at the bottom of the screen that the interview is being done through Zoom, and we are able to transfer information much quicker thanks to this company. The interview then goes on to show what JP Morgan's Marko Kolanovic thinks of where we are in the economy as of right now.
I want you to listen to what JP Morgan's Marko Kolanovic told us yesterday, a man who many people listen to, who's been known to move the market in the past. Here's what he told us about the sell-off, and then we can react on the other side. Here's Marko.
I think we're probably at the end of this upset. Again, you know, if you look at the Russell 2000, look at the Nasdaq, you know, they're now trading sort of below January levels, you know, and just think where we were in January. We didn't know about earnings, we didn't know about COVID, you know, and you know, why were nobody screaming back in January then? Like, so I think we're at the end of this upset. I think market is going to go higher here. That said, we do still, again, prefer sort of reflationary themes.
So Marko Kolanovic thinks that we're close to the end of this upset and thinks that the markets are going higher from here. But how can that be when the markets have already been so high in such weird economic conditions? The reason being is that we have had such tremendous technological advancements that are making companies a lot more productive, and they are able to have higher profits with less costs. We are entering the technology age 2.0 because we have seen so many disruptive companies entering, and they will lead us into the future. Since these companies are driving the costs down, these costs will eventually be passed on to the consumer, and there should be a deflationary economy with the cost of having access to technology going down. Think about how costly computers were 20 to 30 years ago, and now we have a computer in our pockets at all times with our phones, and they're able to do a whole lot more at a fraction of the price. This is the power of technology, and it will grow at an accelerated rate, and we will continually see costs going down as it gets better and better. So that is it, guys. Thank you for your time, and let me know what you think the economy is going to do from here. And if you did like this video, please click the like button, subscribe, and hit the notification bell so you get alerts whenever I do upload a new video. Again, this is Investing with Envy, and I'll see you on the next one.